In my last video I talked about why gold is a terrible inflation hedge. This time I'm going to talk about why gold isn't a particularly good hedge against currency debasement or central banker profligacy. Before getting into this, I should define what a currency hedge actually is. So let's pretend, for example, that the central bank of, say, the United States is printing its currency with abandon. As a result of that, there's a fear that the value of the US dollar is going to collapse, so goods and services brought in from places like Canada and Mexico are going to rise for American citizens. And so gold, the argument goes, is a sort of universal currency that will protect the purchasing power of Americans against their central bankers collapsing the dollar. That's what a currency hedge really is in a nutshell. Now, when we look at the historical example of gold as currency hedge, we find a similar argument to gold as inflation hedge. The thing to note here is that gold moves in tandem from country to country. So a country can have a weak currency, so-called, and gold will be strong there. At the same time, gold will also be strong in a country with a strong currency. So gold moves in tandem from country to country because it's a global commodity, which suggests that it's a silly thing to call it a currency hedge. The gold up, currency down argument also fails when looking at the historical evidence. From 1975 to now, for example, the US dollar has depreciated against the Japanese yen, and the price of gold has risen in US dollar terms. Fine. Looking at the other side of that transaction, the yen has obviously appreciated against the dollar, but the yen price of gold is also up. In other words, the mechanistic relationship that's supposed to exist between currency debasement and gold price doesn't exist, and often doesn't exist for long stretches at a time. The gold as currency hedge argument suggests that if the US dollar drops by 10% against the peso, for example, the price of gold will stay constant or rise against the peso, which will allow Americans to suffer no ill effects from the falling dollar. Now, if we look at the historical record, again, just like with inflation, gold moves in tandem from country to country, and so the idea that this mechanistic relationship exists where currency down, gold up, and vice versa doesn't exist. And so again, gold as currency hedge is a very, very silly idea.